Good day and welcome. In today's session, we are discussing research and development expenditure. This is a concept we find under IAS 38. By the end of this lecture, you should be able to discuss the nature of, as well as the accounting treatment of internally generated, as well as purchased intangible assets. You should also be able to describe and apply the relevant requirements of IFRS as they relate to internally generated intangible assets. Now, you'll know that in our everyday business activities, we need the resources which we often call assets. For you to have an asset, you have to get it somewhere. You acquire it. But to acquire an asset, you have to get it usually by buying it from someone. We refer to that as an external purchase. For example, for me to be able to give you this video, I had to buy some rights to be able to record this lecture using a particular software. As a result, therefore, I paid for this company. When I paid this company, we say I externally purchased an intangible asset. Alternatively, I could have developed a software, my own internally developed program, which I could use to record videos. I could as well use this program to share the videos with you without using any other third parties. If this had occurred, I would say I've internally generated my intangible asset. While it's the basic idea is that both intangible assets, they are intangible assets and they are recognized as assets in our financial statements. The accounting treatment is not exactly the same. I'll start by introducing first external purchase. This one will just treat it like any other asset purchases we have. So for example, if I did buy a software and I had to pay $50 to acquire this software, in my books, I would go and debit my intangible asset. And I recognize that I paid $50,000 to acquire it. On the other hand, because I've already paid, I go and credit the bank. And I credit the $50,000 as well. The accounting for an externally purchased asset is straightforward. On the other hand, if it is an internally developed asset, in that case, the accounting treatment is not so easy. There are some specific rules which are going to go through. The first thing you need to remember is that if you're dealing with internally generated intangible assets, you need to be able to identify if that item is goodwill or if it is any other type of intangible asset. If it is goodwill and we internally generated the goodwill, then we do not record this figure in the books. Make sure that when you're answering questions here, you pay attention. Internally generated goodwill means we are the one who created it. We did not buy it. On the other hand, if we purchased goodwill, it is recognized in the books as we saw earlier on in the previous slide when dealing with externally purchased assets. On the other hand, if it is an internally generated other type of intangible asset, for example, if I develop a software to record videos, in that case, the money I have spent to try to develop the video, it may or may not be capitalized. So the final decision on knowing whether it is may or may not, it depends on the specific characteristics. In other words, we want to know when you spend the money, were you spending it during the research phase, or were you spending it during the development phase? If you didn't tell me that you spent the money during the research phase, we do not capitalize that. Instead, it is recorded straight in the profit and loss account. So this is expense. If I were to show a journal entry for that, I would go and debit profit or loss by the amount of the expense. Let's say I spent 5,000 developing the software. Then I'll go and credit my bank account 5,000. So for research expenditure, the accounting treatment again is not complicated. On the other hand, if it is during the development phase, there are additional considerations you need to discuss. Development expenditure may be expensed. Development expenditure may be capitalized. The decision of capitalizing or expensing it depends on additional information provided. There are 6 features which you are going to see shortly. But before we discuss those 6 features, it's important to remember that there are certain types of internally generated intangible assets you are not allowed to capitalize. They are specifically excluded in the standard IAS 38. Good examples of those, they include internally generated brands, internally generated masters, internally generated publishing titles, internally generated capitalized. All these type of internally generated items, they are not to be capitalized. In other words, any money which you have spent on a brand, any money which you have spent on a masthead, any money you spend on a customer list, it's expensed in the profit loss account. We go and record it by simply saying go and debit the amount spent to the profit loss account, and you go and credit our bank as we saw earlier on. This means, for example, if I use 25,000 to develop an internal brand, then I go and expense it in the profit account, and I go and credit my bank account by the same amount. On the other hand, okay, just before I move on, it's important to remember why should we not capitalize this? The key reason we don't capitalize this is that these items, it's very difficult to reliably measure them. You remember that for intangible assets to be recognized, they need to be reliably measured. So if I would ask you, what is the value of your brand you created? For example, on account it with Leo, what is the value of your brand? I might say $1,000. I might say $95,000. But how do you really know if this value is true or not? It's not easy to have the correct value. It's allowed because you cannot measure it reliably. You are not allowed to capitalize that type of expenditure. Now, for those type of expenditure which you are allowed to capitalize, you need to be able to distinguish the expenditure between research and development. With the research phase, the key idea is that we want to gather knowledge. So I'm a qualified accountant. However, I read a lot. I read about science. I read about medicine. I can read about religion or anything else I want to read about. Now, the reason why I read about this is not because I want to make economic benefits. I just want to know what was the origin of Christianity, what are the origin of Muslim, what are the origin of Hinduism. Because I just want to know, I'm not going to use this to make money. I'm not allowed to treat this expenditure I spent on dealing with the research as an asset. It does not meet the recognition criteria of an asset. Thus, as long as I'm gathering knowledge for the purpose of just knowing, there is no asset to recognize. The same idea applies if I'm not doing final selection, or I'm not trying to choose the final knowledge I'm going to follow. You know that many of us, we are religious, Christian, Muslim, or whatever that religion, but probably you did some research before you joined that particular religion. Because you are doing this for the purpose of knowledge and not for the purpose of selling, for the purpose of creating economic benefits, it means that the expenditure you make there, it is research phase. It is not capitalized. If I am researching about artificial intelligence today, and I don't have an obvious use of the artificial intelligence, I'm just doing this so that I understand how we can make use of artificial intelligence. It means therefore that this is simply research. If we are a manufacturing company, for example, we're making electric cars, and we're trying to design a new type of battery, we know that we could use the type A or type B. But because we have not finalized which is better A, B, C, or D, and we're still trying to learn more about that, we are during the research or the exploring stage. Any money spent in those activities is a research expenditure. The same will apply if you're trying to formulate, that is to create, if you're trying to design, or if you're trying to evaluate possible alternatives. So you're trying to see what else could you do, or how else could you operate. For example, how best to conduct classes with students. Should I do them online as live classes? Should I do the classes physically? I'm trying to explore the alternatives here, but I'm not yet at the decision where I'm selling the content. Because of that, there are no direct economic benefits. That is the question. Do not confuse it with the next stage called development. In the development phase, the key idea is not simply knowledge. Rather, it is knowledge with the purpose of creating economic benefits. In other words, This is an advanced stage of using knowledge. So if I acquire knowledge, I don't just acquire it. I now want to try to find a practical way of taking advantage of this knowledge and create economic benefits. A good example will be creating prototypes or models. We can also refer to this as samples. If I want to sell my videos to students, I can create samples so that I see what is the response of students. If I see that students are happy with that, I can proceed with the classes. Please note here in this case that I'm not just gathering knowledge here. I've already made a decision that I want to run a college, but I now want to see how best to do it. Should I do it as live classes? Should I do it as recorded videos? At that stage, it is now a development stage. I'm not testing, I've already committed into the business. The next element is that you might also be designing tools. Because I now already know that I'm going to record videos, I know that I will need slides. Now, when I'm now developing the tools I need to be able to record or to conduct my classes, I'm now using the particular technology to create economic benefits. This is the development phase. This is not just creating knowledge. It is now making knowledge useful. This will apply as well if you design, if you construct, or if you run operation of a pilot plant. So with the pilot plant, the organization probably they're going to make cars. Now we go and try to make a small type of plant. So you know that probably for a business to successfully run a car manufacturing business, they may need to be able to make 500 cars in 10 months. However, before we commit to this final plant, we can test it at small scale. And we can make a plant which can make probably 5 cars a month. The development of this plant will help us to understand the challenges, the problems we might face when you now increase the size of our production. Again, this is simply testing the idea. We already know what we want to do, but we're simply now trying to see, put it into practice. This is development phase. Development expenditure may be capitalized or expensed. So being development expenditure is very critical, but it does not give you the final decision. The final decision, it comes after analyzing further information. There are 6 criteria. I'll discuss that shortly. Let's look at this example. On the 1st of October 2020, Beige Company started researching on a computer software program. If successfully done, this software could be used to enhance the quality of virtual games. Beige expects to sell this software to many game developers. They also expect to rent it out or even use it internally. There is so much excitement following some promising work done by a team of junior developers. During the year ended 3rd September 2022, $130,000 had been spent on equipment and activities linked to the research and development expenses for this software. Discuss whether this expenditure is research or development. For you to be able to come to the right conclusion here, you need to first explain what do we mean by research and what do we mean by development. During the research phase, our focus here is that we want to create new knowledge. We are not aiming at applying the knowledge. We simply need to know. So when we look at this particular question, what are they trying to do here? We are told that as far as their use is concerned, they don't really know. They might sell this program to developers. They might rent it out. They might use it internally. In other words, we do not have a clear usage or practical use of the final outcome. As a result, we can say this is more like getting knowledge. Once we have enough knowledge, then we decide if we're going to customize it to game developers, whether we're going to customize it for the purpose of listening out, or whether we're going to. So you see that I'm using the word customize to now make it usable for a particular purpose. At this point in time, it is more like general knowledge. This is the research phase. We can continue on the next paragraph. We see that at this point in time, there is further evidence that this information, it has only been done by junior developers. We would expect senior developers to test, to approve before we say these products can be used or not be used. Therefore, it seems like here we are simply exploring knowledge. We are not at an advanced stage of making best use of this software. This is the research phase. Please know that if you're answering a question in the examination, you don't start by applying. You start by discussing what do we mean by the research phase. You then move on to discuss what do we mean by the development phase. And finally, you make your own conclusion. On your conclusion day, that's where you're going to link that since the research phase requires the acquisition of knowledge and it is not yet at a stage to be practically used, it appears that Fresh Company software is not yet at an advanced stage, and therefore this is research expenditure. We will not ask about the accounting treatment here. However, if it was about the accounting treatment, I would know that I'll go and debit my profit or loss account by $130,000. And I'll go and credit my bank account to show that I've paid by the same amount. Now that we know how to distinguish between research and development, let's see, when do we decide to capitalize development expenditure? There are 6 features which should all be present. All of them. If one of them is not there, you are not allowed to capitalize the expenditure. Thus, when you test, there is no particular order which you must use to test. However, you need to ensure that all the 6 items are present. The first item which you need to see is resource availability. This simply means that do we have sufficient resources to complete the development and use it to make money? That's, for example, if I come with a new technology which you can use to fly to Mars, you don't need a planet, you don't need a rover, you don't need a space shuttle, you can just fly with your wings to go to Mars. Let's say I've developed an equation which shows we can do that. Now, we need to see, do we have the resources to make this type of technology work? If we don't have enough money, then we're not going to recognize this as an asset. If we don't have the right skills, then we're not going to recognize this type of development as an asset. So whatever money was spent during this final research, we treat it as an expense. On the other hand, if we see that we have enough resources to be able to make this resource work, to be able to finish this software, we go to the next item we test for economic feasibility. In other words, we're trying to see here, does it make economic sense? You will know that as business people, we need to compare revenue and expenses. If the revenue expenses are more than the expenses, then it makes sense to say we're going to have an asset which will create economic benefits. And when I talk about economic benefits, we want to see, are you able to sell this item? Because if you are not able to sell it, so how are you going to make money with that? Not only are you able to sell, we also want to see if you're not willing to sell it, are you able to use it? So these elements, they can be used as a measure of economic benefits of the assets. How much revenue are you going to create? How much cost are you going to sell? Please know that if you are able to do this, this is another element you also can test separate, other than looking at the economic implications of that element. The fact that you are able to sell something, the fact that you are able to use something, it indicates that there are economic benefits. But how much are they? We look at the economic benefits. We can also test the technical feasibility. With technical feasibility, we want to see, is it practical? For example, if you say you want to make human beings to fly to Mars, to fly to the sun, but is it possible? If I do successfully fly to the sun, won't I burn in the sun? And if I go and burn in the sun, obviously I won't come back. I won't bring any valuable resources which are found in the sun. So in that case, is it technically feasible? You may have to deal with issues like regulation. Did you get regulatory approval? If the regulatory approval is not advanced or provided, unfortunately, it's not technically feasible. Yes, you are willing to do it, but the law in your country is not allowed to do that. You also need to consider the intention to complete, the intention to use, or the intention to sell the final outcome. So if you're willing to create a software what are we trying to do? Do we intend to create it and make money from it? Or are simply doing it for the purpose of the funding it? You know that there are people who are known, for example, for hacking. They can hack your account, they can hack a president's account, not because they want to steal, they just want to get there. And if they get there, they are happy. I successfully cracked the president's software. I now know his secret. But they don't intend to make any economic benefits. In that case, there is no intention of economic benefits. So if you create such a software, you don't capitalize. We also need to be able to measure the value of the money used in the process. That is, for you to be able to create this software, how much money did you use? If we cannot reliably measure the money spent on a particular project, we cannot capitalize that expenditure. But if we can measure it reliably, that is, if all the 6 conditions are there, then and only then should we recognize it. So this is a very important concept. You need to pay attention. When you are reading questions in the examination, they will normally give you 2 items of these 6. And if you see 2 items of these 6 in the positive side, that is, for example, they already have a customer who is willing to buy the program, it means that they have the ability to sell. And they also tell you that they also have enough resources. For example, they got a loan. If they just give you these 2 items and they don't say anything about the other items, you should conclude that we should capitalize the asset because there is no evidence that you should not capitalize. However, if there is evidence that one of these items is not there, we don't capitalize. Let's look at an example. Bruce Limited started a new project on the 1st of January 2021. They spent $5,000 per month on research until 3rd April 2021, when the project lead concluded that the development stage it commenced. It's very important here to look at the wording. In the first part, they were talking about research. In the second stage, they told about development. From this date, they spent $8,000 per month until 3rd September 2021, at which date development was completed. The directors of Bruce Limited only approved a final evaluation of the project's technical and commercial viability on 1 August 2021. Show the accounting treatment of this expenditure in Bruce Limited's financial statements for the year ended 3rd September 2021. So if I'm going to report my financial year, I know that because it's ending on September, it will have started on 1 October X0. And it's going to end on 3rd September X1. Now we know that at the beginning of the year, sometime on 1 January, they started this project and were told something to do until 3rd April. We're also given some additional information about August and then the final year. Now let's go through the stages so that we understand what does each particular date mean. The first date, it mentions that on 1 January, they commenced a project. They were doing research. So we are doing research here. We know that this amount is an expense in the profit account. No problem with that. On the second day, which is 3rd April, research was concluded. They started development. We know that research development expenditure can be expensed or developed or capitalized. So we can expense this or we can capitalize. That is, we can have an asset. We don't have enough information to conclude here. On the 1st of August, we're told about technical and commercial viability. In other words, in this case, it is still development, but it meets the criteria needed. It's clear that on this date, we capitalize expenses. Therefore, when I go to quantifying the items, I know that from January to the second date, which is on 3rd April, I've got 4 months there. I was paying $5,000 every month. And for those 4 months, because it's a research expense, 5,000 times 4, it will give me $20,000. This is a research expense. It goes to the profit account as an expense. The second thing is to have on 3rd April is development, but we have not made the criteria. So because we don't have the criteria on that date, again, any month spent until this date, it is also expensed. How many months is that? We got May, June, July, and August. Please know that the given date is 1 August. We don't count August. We must end on July. Because it's at 1 August. So we're going to say May, June, and July. We have 3 months. I'm going to go and expense 8,000 times 3, which gives me $24,000. So it is development expenditure, but still we expense it. Then the final part, which starts on 1 August. Because we've met the criteria, I'll take the amount. It is going to be 8,000. You know, the amount is not changed. It is still 8,000. But this is for the whole of August and the whole of September. 8,000 times 2, it gives me $16,000. The $16,000, it is capitalized. In other words, it is treated as an asset. Therefore, based on my conclusions, if I were to record these items in my books, the first item, I would go and debit research expense. Please don't this means the same as saying debit profit or loss. I go and debit research expense. I can say debit profit or loss, technically the same thing. And the amount there, we saw that it is 20,000. On the second item, I can also go and debit development expense. Please know that these two items, they both go to profit loss account because they are expenses. And the amount there, it is 24,000. Then the final item, I go and capitalize an intangible asset. Because it has been capitalized, it's now an asset. I go and debit intangible asset. The amount is $16,000. Credit, our credit bank. Our credit bank on with the same figures, credit bank by 20, credit bank by 24, credit bank by 16. You can as well say credit bank by 60,000. So show the accounting treatment of this expenditure in Bros Limited's financial statement. We are done with the treatment of the items. It's very important when you're answering this question, you are clear at what stage are you dealing with? Are you dealing with the research phase or are you dealing with the development phase? With this, we've come to the end of our discussion on IAS 38. We'll conclude by tackling a few questions. The first question which we have here, we have already dealt with it. It was dash carbon, so I'm not going to do it again because I did explain to you during the class. The other question which we have, it relates to intangible assets in general. All intangible assets, they must be carried out at amortized cost or an impaired amount. They cannot be revalued upwards. Is this statement true or is this statement false? You need to make use of the knowledge we saw in our first lecture and today to be able to answer this question. We know that intangible assets, they can be held at the historical cost method or revaluation method. Because there is the revaluation method, this statement is not correct, particularly because of this way. Item number B, the development of a new process which is not expected to increase sales revenue may still be recognized as an intangible asset. We know that the development stage, if it has economic benefits, it must be capitalized, provided it meets all the other 6 criteria we saw earlier on. In this case, there is no revenue increase. However, revenue increase is just a form of economic benefit. We can also have economic benefits by saving costs. Thus, not having revenue cannot stop us from recognizing this. Because they said it may still be recognized, possibly because of cost reduction, this statement is correct. However, I want to conclude this to my answer until I finish the other questions. Expenditure on the prototype of a new engine cannot be classified as an intangible asset because the prototype has been assembled in the physical substance. Please note that expenditure on prototypes, it indicates the development stage. And because it is a development stage of creating our program, this can be capitalized. The fact that the question says it cannot be capitalized is wrong. Expenditure on making models, they can also be capitalized. Item number C, that's wrong. Item number D says impairment losses for a cash generating unit are first applied to goodwill and then to other intangible assets before being applied to tangible assets. This particular requirement, it wants to see if you know IAS 36. In our lecture on IAS 36, we saw that it is correct that intangible impairment, it must be allocated first to goodwill. However, it is not correct that this should also be allocated to other intangible assets. The standard says it must be allocated to all other assets, whether intangible or not. Item number D is wrong. Therefore, as we discussed earlier on, the correct answer here, it is only B. And with this, we've come to the end of our discussion on IAS 38. Looking forward to meet you in our next video. Thank you for attending.